In this video, I'm going to talk about what it seems like trading penny stock. Penny stocks are one of the most, speculative type of companies. Companies that don't have enough market capital. Sometimes they have only one or two product category. So that's why for the long-term investor, the penny stock can be very risky because this company often tends to go down in their value. So to be profitable by trading penny stocks, there are certain sort of strategy that anyone can apply in order to make money on a regular basis consistently over time. And that is awesome because the volatility that we often see on trading penny stocks, that we don't see while trading in the long term blue chip uh, type of big companies with big capital. And of course they will tend to go high with time on the valuation of their company. But overall, uh, people trade penny stocks because they want some quick profit out of trading penny stocks, and that can be very advantage for a new trader or someone who is looking to make money on a in a very quick time. So, but it comes with a very risk. You have to have some sort of experience and expertise in trading penny stocks. You have to know about the pattern, how it works, how penny stocks behaves in terms of the price movement, price action, what time the price tend to go up, then the risk management thing. You have to get out of the trade by taking little profit from that trading. 5%, 10%, or 15% is a great uh, profit you can gain on a quick time. So that is very one thing that with the penny stock that we don't often tend to see with trading, big volume, Wall Street, high good companies. We don't often tend to see that sort of price movement. I mean, like 25%, 30%, 50%, 40% in a day or two. So that happens with penny stock. Sometimes the stock moves like 50%, 100%, 200%, one single day. Uh, you have to be uh, knowledgeable. You have to be experienced about knowing what news that seem to push the stock really high. So sometimes we see the company done some deal with big company, big company's brand name attached with a small company, then the stock price tend to go very high on penny stock. And also sometimes we often see if a merger and acquisition happens, the valuation of the company you know become 50% higher over time within one day. And also sometimes if the company comes out with releasing or launching new product, because this penny stock they often tend to have one, two, or three, or five products. So whenever sometimes they launches a new product, the price literally, boost up for 100 and 200% in a single day. Then obviously it crashes in the next few hours or two. But if you are a trader, you can bid on the lower price, ride on the momentum, and exit by taking 50% or 20% if you are got lucky, 30% profit out of that trade. And don't be upset about it. I mean, obviously you can make much more money out of the trade, but if you like get out quickly, it's often seem to be better because sometimes the price drops very quickly. So it's very safe for you to take a little profit like 10, 15, or 20%. That's an amazing profit. Like oftentimes you see by trading on the big companies, the companies tend to price go up over the course of a year. Like their price goes up 10% or 15% in one single year. But with penny stocks, that happens within few hours, sometimes within one day, sometimes within 5 minutes. I mean, that happens. So that's why, for traders, they love penny stock, trading. But it comes with a great risk if you don't know how the penny stocks, tend to go up and then fail, how the volatility kind of work. You will be crushed when the price seems to go down. So You have to have some sort of experience and get used to trading penny stocks and seeing the price action while trading. So I remember in few days. I mean the when the stock price literally very went very high. I give you some example like in the coronavirus crisis, any company, biotechnology or a medical sector company or pharmaceutical company, whenever they have announced some coronavirus related news, like they probably submitted some sort of uh, you know a vaccine for approval, or they get approval for their coronavirus vaccine test, or even there's some sort of, I mean, they release face mask, deal with like sale of face mask or any coronavirus vaccine related thing, anything that cure coronavirus. So whatever the news that has been attached with related to coronavirus, when the company releases the press release and the news hits up, and right after that in the morning the price seems to go up like 50%, 100%, 150%, 200% in a one single day. So it's very, I mean, crazy. I have seen the same thing happening over and over again. Like any company that comes out with coronavirus cure related, vaccine test, vaccine, a release, uh, or maybe they have done some sort of deal with, I mean, WHO, World Health Organization, or they have submitted some reports and it's being progressed with the FDA approval. The price seems to go up, and it's crazy. Like I see every time the price is going up, I ride the momentum, took like 15-20% profit. Then when the stock began to crash, I exit immediately. I don't regret like taking a small profit while I could have made much more, but that's how the trading works. I mean, you have to take profit rather than holding for a long time, because often after big rise in prices, the price seems to go down. So I don't want to be someone who is participate in a trade while the price goes down. I want to be participate in a trade, the price seems to go up, riding on the momentum, and then take some quick profit out of that trade and make some quick money and exit and look for the next potential trade. So that is the key mindset of trading penny stocks and to get success over time. uh, some people have some weird expectations. Some people see like penny stock, I